Okay, let's have a look at this question then. Now let's presume that the discount is 10%. And I've got a choice now of either leasing or buying. Okay, so if I lease it, it's a 4-year lease. And it all depends whether this was in arrears or in advance. I'll put this one as being in arrears. So it's paid at the end of the year. So the 1,000 lease payments are paid at the end of year 1, year 2, year 3 and year 4. Excuse me. Now, every time you make a payment, an expense, you get a tax relief because it reduces your tax bill. Tax is 30%. 30% of 1,000 is 300. Let's say it's payable in the year to make life a little bit easy for us. So 300, 300, 300, 300. Add it down, 700, 700, 700, 700. Okay, and now we discount it down at 10%, which is 0. You get this from your tables, 0.909, 0.826, 0.751 and 0.683. Okay, and then you multiply them through. So, let's have a look, what have we got? 700 times 0.909, I reckon is 636. And we've got 700 times 0.826 is 578. And we've got 700 times 0.751, which is 526. And then finally, we've got 700 times 0.683, which is 478. And then you add all those, they're all costs, remember. So you add all those costs across 636 plus 578 plus 526 plus 478 gives me 2218 costs. Alright, if I lease it. If I buy it though, it'll be slightly different because I'll pay for it in year 0, look, at a cost of 5,000. Then I'll get my money back, I'll scrap and get 1,000 back in year 4. Then I've got some capital allowances, and so I just need to calculate my capital allowances. So my capital allowances would be 5,000, and I think I get 25%. Yep. So 25% capital allowances would be 1,000. Wouldn't be 1,000, would it? It'd actually be 1,250, I think, divided by 4. So 1,250. So 1,250, of which I get 30% tax relief. So times by 0.3 gives me 375 in year 1. Because reducing balance method was 25%, there's just a quicker way. So you just do 100 minus 25%, which is 75%. So just times 375, times it by 0.75, that will get you 281 in year 2. In year 3, that by 0.75, 211. And then in year 4, you say, right, I've paid for it, it cost me 5,000, I've got scrap value of 1, so effectively it's cost me 4,000. I should get 30% tax relief on that. 30% of 4,000 is 1,200, isn't it? 1,200, that's the total tax relief I should get. So in year 4, I want a balancing figure of 1,200, less the 375 I already got, less the 281 I already got, less the 211 I already got, 333 in year 4. So let's put those figures in then. So payable in the year, so it would be in year 1 would be the 375, year 2 would be the 281, year 3 would be the 211, and finally year 4 the 333. Okay, so we've got 5,000 in year 0, we've got 375, 281, 211 and 1,333. And then we just discount them down at 10%. So that's 1, that's 0.909, that's 0.826, 0.751, 0.683. You get those from your table, and then we're just going to multiply these through. So you've got 375, well, I can do that one, that's 5,000. And I've got 375 times by 0.909, which is 341, I'll call it. Next one is 281 times 0.826. 232. Next one is 211 times 0.751, which is 158. And then finally, that 1,333 times 0.683 is 910. Then we've got to add all those across. So we've got 910 plus 158 plus 232 plus 341 minus 5,000. So I've got costs of 3,359. Okay, these are costs as well, just the way I've done it, and that's a cost. Alright, so obviously I would lease it rather than buy it in this question, because it comes out as being fewer costs for me in total, so the answer is to lease it.